So friends, herewith now let us move towards how do we gonna value the inventories. Till now we have understood that the inventories are so and so type, and inventories, how do we gonna deal with in a financial statements. We understood how it will be presented into a statement of position and a statement of income. In that case, even after we understood drawings where the goods are taken by the owner itself for the personal use, that should be always considered at cost price, not at all a selling price. So this was the basics till now. Now let us move towards how do we gonna value this. Friends, there are a legal requirements of Ind AS, or you can say that even International Accounting Standards, where IAS 2 is providing for how to value this inventories. In that valuation, the core rule as per the conservatism concept is provided. In this core rule, in a conservatism, it is provided that the inventory will be valued at a cost or NRV whichever is lower. Friends, a cost or NRV whichever is lower, in which a net realizable value is a value when we will sell the product. Friends, take a look towards first, what is the inventory? It is very imperative before understanding its cost. What do you mean by that? First of all, here the meaning of inventory as per the Ind AS, or you can say International IAS 2. This IAS 2 provides three bifurcation for an inventory: the stock which is there, the goods which is there. See, always there is a two types of business. A business type can be a person who is simply trading the goods, purchasing and selling. He is not making the goods, he is not manufacturing the goods, simply purchasing and then selling the goods. But compared to that, another business style, another business way can be a manufacturing and selling. So friends, for both of them, the raw material, the finished goods, or something known as WIP will be bifurcated. For the trader, simply purchasing and selling, having the goods for resale, and his whatever inventories will be called a stock in trade, because it's a trading he will going to do directly from this available goods. It is already ready for sale. Friends, now second thing, when there is a manufacturer is making the goods and then selling the goods. Say for example, taking this pointer as one of the finished goods, here it will not be a finished good directly from its origin. Obviously friends, somewhere we need some chip, some electrical stuff, some of the plastic materials, some of the battery we need, and then accordingly I will prepare this as a final material that I am going to utilize. So basically in this case, this whatever pointer I have, first will be a raw material. A simple raw material means it is a basic unprocessed things or some component, etc. Friends, this can be a component in a way that, for example, we are making entire automobiles, cars, and in car we are just preparing the batteries and we are preparing the bonnets and all that. So that batteries and bonnets, all the things are component part of the car. At last the entire car will be assembled and final product like a car will be prepared. That raw material is a basic component where the raw material prepared basically will be utilized into the further production. Friends, this further production is nothing but a process whereby this raw material, see, simply all consider that in this pointer I consider a plastic material, the electrical materials and all will be a raw material. Friends, it's not a miracle or something we just gonna put them together having some chanting of some magical words. It won't be become just directly this pointer. To become a pointer, they will run through out of some process. and that process is the production process. Friends, when the raw material stage 1 has been cleared, we purchased it and now we are putting it in the production process. Say there is one big machine, the assembling machine is there, robotic type machine which is operated by one person. Friends, if you want to understand something called as like productions and all, always imagine some factory. In a factory, this raw material will going to be just taken away into the machine etc. Out of this machine, friends, the robotic process of the machine operated by some person or worker, he will, like that machine will basically going to put up this raw material from its basic material source to the finished goods. In between, it is called as work in progress. Friends, this is another type of inventory. I'm talking about first was raw material, now second is a work in progress. Friends, a work in progress means what? It's a semi-finished goods, also known as semi-finished goods, which is just in production right now. It's not finally completed, which can be sold directly. Say, for example, where we consider a shoe, so basically a raw material will be latex and the rubber part. But yes, when the sole was made, the shoe sole, the sole was made and that was only a basic WIP. It was in process till now. It's not a final product. We're just not gonna put up our legs on sole. Friends, here whatever we are using, it's a final product called as shoes. The sole which was made as a first process was just a WIP. Okay, then another important thing, as and when the sole passed through the process of the production, through that big machine, some say whatever cutting and all that process were carried out on the sole, designing of that, the molding of that. So accordingly, at the end of the process, entirely out of the second part of the machine, you will gonna get the finished goods. Friends, when you get this finished goods, a totally made shoes or a totally made pointer like this, so basically it will become your finished goods. You are going to sell this finished goods. It is ready to sell. So accordingly, this whatever finished goods you have is also can be a part of your raw material or inventories also. Friends, in a factory you can see these all three types of things. A material is there, a goods which is semi-finished also there, and a finished goods is also there. Obvious, because it's not always that we don't have any raw material which is still lying. No friends, always some of the buffer stock of raw material should be there, because any time in a production some of the material if get lost or somewhere destroyed, you need some other material to replace it, or say for example some material got spoiled or damaged. So I'm talking about why the raw material should be there in a factory. Another WIP will be there. Yes friends, at the end of the year, say on the 31st of December, the evening of December, where the business hours were closed, the factory was running, now the day ends, but importantly the year ends on 31st of December. Now on that day, on a 31st December, you had this stock, something which was not finished. It was just half finished, a semi-finished, which was still in progress, work in progress. So on a 31st December, you can have this type of stock as well. Somewhere at the opening of the year, you can have some of the WIP stock. But friends, the valuation of WIPs, the raw materials and the finished goods. See, these things we will going to have learning in some special subject, a paper called F2 paper of yours in a foundation level. That F2 paper will give you a brief about how do we gonna value this WIPs and all. Yes, but for the accounting purpose, if we gonna calculate this WIP value, how do we gonna account it is somewhat more important. This is the subject of accounting, and the another subject I'm talking about even, that is a costing subject. A cost we will find out. Friends, it's a special another stream of learning into a commerce field. So basically, as of right now, we just have a look towards what is WIP, that's it. Another thing comes, a finished goods. Friends, it can also be there lying in your godown, just because it's not obvious that directly you just gonna sell it up as and when it was made. Friends, it is very obvious that many times you have some pre-orders, already booked orders, but it also takes time. Basically, if you have not planned for your orders accordingly, your inventory will be lying in your godown for a longer time. So there can be this type of inventory still be there in your godown. You will also going to put some buffer inventory in a finished goods also, because many a time some of the retail customer load may come without some pre-orders, and accordingly even some of the goods if getting destroyed or somewhere lost etc., you can replace it. Replacement finished goods are also there. So friends, this is what you're going to sell, the finished goods. So hope so you would have understood the discussion about what is inventory, what it includes. Again, the three things it includes. Friends, now the most important rule comes, rule which states that what do you mean by the valuation of inventory? How do we going to value for the inventories? See friends, three of the inventories I'm talking about. Now when I'm saying inventory, you should just remember that it includes all the three types, being raw material or WIP or finished goods. So friends, here you can see the inventory is going to be valued. See, this is the rule made by the International Accounting Standard, the IAS2. These are some of the protocols you can say of the accountings, where it gives some rules, a mandatory rules you can say, based on some very important concepts as per the older rituals or maybe modern requirements of the accounting in a business. The accounting standards provide the rules even for every component of the financial statements. So for the inventory component, the rules are given by the accounting standard 2, the IAS2. This accounting standard states that how do we going to value the inventories? Friends, it is stating that the value of inventory will be lower of its cost or its NRV, net realizable value. Friends, whichever is lower. Friends, when they have stated this rule, basically it is supporting to the conservatism principle of accounting. These are some basic principles of accounting which we had discussed somewhere in the second chapter as well. The duality concept, the concept of separate legal entity and all, accrual concept and all. So as per the rule, here we should record all the losses of future which is coming. The conservatism I am talking about, friends, it states that coming future loss which you expect is coming, you should record it today, right now. You should lower your values of stock, and if any of the possible gain and benefit profits in future, you should ignore it. So here conservatism is more about pessimism, thinking about the worst, being ready for the worst, and never expecting anything which is better, good hope, and future optimism is not there in the conservatism concept. So friends, the conservatism concept has supported this, the rule which is cost or NRV, whichever is lower. How? See friends, what is the cost? The cost is basically whatever the expenses you have incurred for this inventory. Friends, you have incurred the possible expenses in like raw material when you purchased it. Accordingly, another one when you put up the labor and machinery expenses, all the stuff for making the process of in progress, half processed goods, etc. And then till the finished goods, there was something different expenses to make the product finally, cost of production. Friends, this cost is also dealt with another special subject, paper F2 of your curriculum, that is cost accounting or management accounting, you can say. Here we will just going to understand it is a cost versus NRV. Somewhere we will be available with the cost details, but the most important thing, if it is available, how do you gonna account it? So when you gonna account the cost, basically friends, somewhere you debit or credit the cost, it is debit because it is expenses. But yes, NRV concept, it is stating that, say your goods are still lying in the factory, you will going to sell in future. It's not only about finished goods, but it may be also about raw materials, its costing value at the disposal, etc. Now friends, here when you gonna sell the finished goods in future, you will gonna realize, you will gonna get something amount, and if that future expected return amount, it's a NRV, by selling the goods, it's lower than your cost, you will be at loss, because you spended, say for example, a total cost of 500 for making one product, and at all that final product you going to sell at only 450, you will be at loss. Still the product is there in godown, but in a market scenario you have understood this. Friends, many a times, it's not very obvious, but yes, many a times the NRV will be market value. How do we find it? So basically we just gonna demand some of the quotations from another sellers and all. We may even see how the government is providing the pricing mechanism for our product and all. We can get that in future, as coming time I'm gonna get this much only. If I'm earning more than my cost, no worry, you take it at cost. But yes, if the future earning is going lower than the cost, then you consider your stock value at that lower value, that is NRV, when it is lower. If the NRV is lower than its cost, you should always record it at NRV. Friends, so the rule comes, the cost or NRV, whichever is lower. Here you consider both of them. Friends, another important thing, NRV, basically you should deduct any of the further selling expenses required to make the sale. NRV is something future expected selling price, but yes, if some future expected further expenses also there, so from the selling price you deduct that. Net amount you get. Say for example, you have appointed some agent which is taking some 10% commission to sell your product. Your product costing say 100, but you are knowing that when you're gonna sell it, that is somewhere you're gonna sell it at 100 only. It's not possible maximum about that, and even after that, from that sale, the 10%, that is 10 rupee commission will be deducted, and you will get only 90 rupees in your hand, on your hand, net realized on your hand. And that is why it is named as NRV. Friends, this NRV is lower than cost. Yes, I told that cost is 100. What you going to sell is at 100 minus the expenses also. In future when it will be sold, the commission will also be there. So accordingly you get 90. 90 is lower than 100. So cost value must be 90. The stock, the inventory I will value is 90 only. So yes, it's a time to take a look towards how we will apply this simple rule regarding how to value the inventory, and then in that we have this question. Friends, here the last line for the total, this is multiple object question. So here we provided that what is the value of the closing inventory. See, here the closing inventory valuation has been asked. You have been provided with the value of the cost, the units, the NRV is there. Friends, you should take the cost or NRV of individual materials separately, the product separately. It's not about making a total of cost or NRV, comparing each other in total. No, not at all. Taking for all the products separately cost and NRV valuation. So let's take a rule into this. Here Cole's business selling 3 products XYZ. This was the data with you. The cost NRV is given. Yes, apply your mind for this. You are provided with this data. The rule, when you see a cost or NRV, you should just click in your mind that it is nothing but somewhere it is 7 or 10 for product X. It is lower 7 amount multiplied by its unit. The total will come 700. For Y, it will be 10 versus 8. The lower is 8. So the total 8 is the lower amount multiplied by the units. 200 into 8 is your value for Y. And for Z, it is 19 versus 15. Lower is 15. So the value 15 is the answer versus multiplied by the units 300 into 15. Total value will come. Hope so you would have multiplied the amounts as I told. Now understanding what is the total value, here is your answer indicating 7 into 100, 8 into 200 and 15 into 300. The lower amount compared for different product separately. It's not in total. I compared it separately. And here is my answer. The correct answer was B, 6800. Okay, let's move towards something important about what do you mean by the methods of calculating the cost of inventory. So friends, let us move towards this valuation methods, in which first we have this different 3 methods which are specified by this IAS2, and these 3 methods includes the first one, that is a specific unit cost method, another a Fifo, the first in first out, and the average cost method, the Avco method, well known method as well. Now see, in these 3 methods, it is the option to the different entities. They can select any one of this. Friends, they can select 3 of these methods as specified by the IAS. Accordingly, here the first method, let's discuss about this, a specific identification method, also known as a unit cost method, means you will going to compute the cost. Friends, we already have discussed, we discussed about the cost versus NRV. Here I am talking about how to find a cost, because NRV is a part of market price. It's a different mechanism. But the cost mechanism have the option as per the IAS2 for these 3 methods. First method, and which is specifying that you will going to calculate a cost for a specific product, a specific unit, but where those units are separately identifiable, and for that the high value cost is also there. Friends, for example, you are purchasing a lot of huge machines and selling it. In this case, friends, there is a huge cost involved in the machine. You are a seller of machine, you are trading into machines. So what you do is just purchasing and selling, making a market mechanism, trading for it. So in this case, all your machines are in a different customized method. Friends, you will not gonna record it at some perfect same level cost. No, it is not something you are trading up some of the food products. No, all the food products are same in that case. But here the value is also high, the different goods are also there. So you will able to select this method known as a unit cost method. Friends, in the IAS2 requirements, some of that we will discuss later on, but yes, very basic other requirements are also includes that you have to select the method at the beginning of the year, and yes, you have to follow that throughout the year. In the second year, if you want to select some another method, you can. So accordingly, This is the first method we have discussed about, but wherein it is possible only if there are different products and a huge value cost is also there. Another one, most famous in the FMCG and the food industry or some retail shops and industry types where the products are in huge quantity, or same products are there. Maybe a trader of some electrical products, say for example solar panels. One of the trader is just trading into solar panels. So more or less all his solar panels will be of same value. He would have purchased it at same value. Maybe possible that some different lot was there having some different value. But yes, some of the units, for example a solar panel purchased in the month of January at some different price, and in February it was a different price. But yes, there is one product. Here a Fifo method is also useful. How we can say, friends, in a Fifo, the name first of all, discuss about it, that is first in first out. Friends, it is a very basic logic for any of the businessmen. He will think, a businessman thinks that whatever he purchased earlier, he should sell it first. Say, taking the example of some medicine shop, in that case, if that medicine shop owner could not sell the product before its expiry, so he will going to lose, he will be at loss, because whatever the expiry medicines were there, tablets are there, he will have to bear the loss of that. So basically his mind is always running for to sell it as fast as possible. Whatever the earlier was purchased, it will going to be expired earlier, and if he could not sell it, he will going to be in loss because it will expire. So FIFO is normal logic of any of the retail businessmen. Here the FIFO indicating that whatever you purchase earlier, it will going to be sold earlier. Means in your shop, what you do is you are putting your older goods on a top so that you can snatch it out when a customer came to purchase. You are putting your latest stock at the lower part or downward. Again, just imagine, friends, I am talking about the older one at the top and the younger one, the latest one, will be at the bottom. You put up the goods that way. Say, friends, here the different prices were also changed, because say for example you purchased for 2 months earlier, before 2 months, that was the price something different, the cost behind it you purchased was different. Now you gonna purchase today, it's a different price. So the price difference is changing the cost. But yes, some of the units were older, some of them are younger. Here you're gonna put up into your rack in a older to the newer one. In that sequence you will put up. Now out of that the goods will be sold out. Whatever the older one will be sold out the first, and onwards it will go on. See, friends, when you sell the product and you utilize the material etc. out of it, whatever you left with at the year end will be only and only the younger one, obvious, because the older one you sold out. As early as possible your thinking was there to sell the older one. So friends, here with your older stock was sold out, and now your younger stock is there in your closing stock. The advantages, disadvantages and all are a different story which is dealt with in the IAS as well. Friends, when we follow a FIFO, please understand one of the mnemonic I am preparing, or some words to remember, that the sale will start from upward and the closing stock will lying in a downward. Friends, take a chronology of different units which are coming first in. So take a chronology order into that, and when you gonna just reduce the product by selling it, you sell it from the top, which was earlier. The first came in, the first goes out. So accordingly, the sale from the upward, the closing stock remain in a downward. Do understand this for a FIFO. It will be useful for taking the practical examples into this thing. Friends, in an exam also you will be encountered with many of the related questions for FIFO and LIFO. The FIFO method I'm talking about. Yes, Chris. Now here we have the AVCO method. Friends, here AVCO method specifies that you don't take the chronology order. What you simply think is what average per unit cost should be, and on that basis you record your final closing stock. You will not see which came first, which came later. Friends, this is good possible in industry where there is no perishable goods. Say for example, you are dealing with some steel related products and all. One of the steel bars you are selling, and a steel bars, there is no any of the, say obviously there is no perishability like foods and vegetables. What happens? You're gonna sell the steel bars still lying there. You purchase 3 months before, the price was different. You purchased 2 months before, the price was different. So this steel bars having the different cost in a different time. So we will take the simple average of the costing for the different purchases. Friends, the formula for getting this weighted average cost, the average cost out, it will be like you will consider units multiplied by all the purchase cost at a different level. You total this unit into purchase cost for all the purchase divided by the total units. Again saying units into purchase for all the purchase division by all the total units only. You get the weighted average cost. But friends, most important is whenever there is a new purchase, the weighted average will change, and the goods which are sold from the available purchase will be deducted at a cost of weighted average before the selling, etc. Friends, before the sale, if the weighted average is something 5 rupee a unit per unit, then it will be counted at 5. Say for example, after the sale there was another date has came and there was a new purchase, the previous 5 rupee average will going to be changed. Friends, better you will look towards some of the good examples like this. A most important practice towards these are two methods, friends, because these methods will change the value of inventory. And friends, if we just remember the previous examples and questions, if the inventory changes, the value changes, the income statement, the gross profit will also going to be affected. How we can say here in the question, you will able to understand how that amount taking at the different methods will going to change your gross profit. Read the question. Starting a business. Sam started business on 1st January. Friends, important, as the business has right now started, there will not be any of the opening stock. Here only the purchases will be there and some of the sales units will be there. You have been asked about the purchases. We have been provided that is January 5, the different 3 purchases, the 5 units at 4, 5 units at 5 rupee and 5 units at 5.5 rupees also there. Friends, might be possible on a different dates we purchase these 5 units. There are 3 different purchases on a different dates at a different prices. Here you can say the 5 units having different prices also. Total 15 units you have purchased. I'm talking about some important points of this question. Start writing about that also. A total 15 units have been already purchased. Now then onwards, sold 7 units at 10 rupee per unit on the 5th of January as well. Friends, the date is indicated before the word January, means it's a date, but the word after, the number after January word is indicating the units only. Please understand that. So here whatever the sales made 7 units. Out of the 15, if the 7 units has been sold, there are 8 units which are pending and lying as a closing stock. Hope so you would have understood this. Friends, now the thing comes, how do we gonna find this value of the total closing stock? Just remind, in the previous questions were there where some of the closing stock value were already given to you. It was given just for sake of understanding at that level. Right now, here we will going to understand cost valuation. Now here, part A is demanding you value of closing stock at the end of the first week of the trading using the Fifo and the Avcu methods. Friends, these two methods having their different implication for valuing the stock. Let's go and understanding that. First of all, let's take the A part, which is providing you that the closing stock is calculated in a way like this. First one is providing you the units which are purchased, 5 units, 3 times it was purchased, total 15 units, sold 7 out of it, so closing stock was 8. Now let us consider this Fifo method. You have been asked about closing stock. So friends, in the Fifo, as I told, the closing stock will be taken from the downward. Friends, just see over here the downward purchases. Out of that, the Fifo will be applied. You consider which stock is still there. Out of this 8, starting from the downward purchase, which stock is still there? Because whatever came in as a purchase, some of that is 8 units are still lying into the closing stock. So accordingly, the 8 units are part out of this 15 units only. But yes, the closing stock for the Fifo starting from the downward. It means you have to take the first bottom 5 units at a 5.5 and the remaining 3 units from the 8 will be taken at 5. See again, I want to make total 8 units as a closing stock value. The 5 units taken from the bottom, the last purchase of 5.5 per unit, and the remaining 3 from the 8 is taken from the 5 units, 5 rupees purchase per price purchase. Here you can see the answer as taken. Friends, taking Fifo here, you can see 42.5 is your correct answer as an inventory. But friends, if say for example we're gonna take the Avco. In the Avco method, as I told you, the inventory will be, first of all, 8 units are there. You have to get that. See, number of units are always simple calculation of whatever you purchase minus whatever you sold and all. But here the units you got 8. How will you gonna get this average cost? I told you earlier, the average cost will be, you make a total of all the purchase, the units multiplied by prices. Total of that, all of them getting that divided by total number of units which you purchased. Friends, you can see 5 units were purchased at 4, 5 into 4, 20. 5 units purchased at 5 rupees, 5 into 5, 25. Another 5 units purchased at 5.5. That another amount you will add. So 20 plus 25 and the third amount in the third purchase. You add all of them. When you add all of them at total division by the number of units you purchase 5 plus 5 plus 5, you purchase 15 units. So dividing that amount with the given 15 units, you can get the total price 4.83. So getting this 4.83 as an average cost, the number of units you multiply, a closing stock of 8 units multiplied by 4.83, you get this 38.64. So friends, this is the way you get this closing inventory of 38.64 total for the AVCO method, and it is different for the Fifo method as well. Hope so. You might be understanding this, how this inventory is calculated over here in the Fifo and the weighted average. Take a look towards how the question B is demanding the impact of income statement using these two methods. Friends, very important, the method changes, the value of inventory changes, and accordingly the profit, that is gross profit, will going to change. First of all, just remind what was our gross profit. It was a sales minus cost of sales. Here you have purchase, here you have the sales also. 10 units, 7 units sold at 10 rupees per unit, $10. You have the sales data, you have the purchase data as well. It's a time to take look towards the part B of this question, which is asking like this. You can find it out. Friends, sale is same amount, but the cost of sales formula, which was opening plus purchase minus closing stock. Here the opening stock is not at all there, so you have only the purchase minus the closing stock. But yes, in a different two methods, the closing stock value was different. You can see the first part as calculated the profit as per Fifo method. You can see the 40 is the amount coming for this. The purchase was total 72.5. You can see the different purchases, different prices. In this year entirely 40 was the profit as per Fifo. And if you look at the AVCO method, here the AVCO method providing you the amount of inventory at 38.64. Friends, here the amount changes, and as the amount has changed, you get the profit which was lower in it. So as the profit is lower, AVCO method, you can see the difference between the two methods, how they affect the gross profit. Friends, how do we gonna select one of the method out of this? This is crucial question, because at the beginning of the year you have to select what will be your method. You will select either Fifo or the weighted average, that is AVCO, or you gonna select this a simple identification, a unit specified method. But when you will going to select the method, you will keep in your mind about how will your sales would be, how much the purchase price would be. You have to take some forecast. You will take some forecast and information about what will be your purchase and all. Then you will take a look towards how the Fifo will affect the gross profit and all. And if you having some target regarding the lower or higher gross profits, accordingly you will select methods out of these three. But yes, you cannot change the method then after if you have selected. So obviously it will be a careful importance for selecting a method as well. So friends, taking a look towards another equally important and a very crucial question. But yes friends, it's a question which you will surely gonna encounter with, because it's a purely illustrative question for the Fifo method. As you can see, the business has commenced on 1st January. Obviously the 1st January the business has commenced, so there will be no any opening stock. The opening stock is always for a running business. The first year of a business is there is no opening stock. So friends, Here the different purchases you have been provided with. The purchases are in the month of the January, February, March, the April, May and June. Continuous purchases in a June. Throughout the June it was only a purchase, and now in the June 1420 the articles were sold. 7,000 was the amount you sold on in total. You have not been provided with the unit prices, you have been provided only with the total sales amount 7,000. So here you can see the total 1420 articles, but out of that please consider even what was the purchase. Please make the total of number of units of purchase. The second column, as you can see, 380, 400, 350, 420, 430 and 440. Friends, also look at which method you are asked. You want to find the closing inventory, also find the gross profit. You have been asked to find as per Fifo method. Please remind the words for the Fifo. The sales will be from the top, the closing stock will start from the downward, the bottom. Take a look towards 1420 articles has been sold. First, how much articles you are left with, you must go for that. Hope so you would have totaled out the purchases. You have the 1420 which are sold. So friends, basically first you need to find out what is the inventory you have right now. You are left with the inventory 1000 units. Total 2420 was the number of units which were purchased. Now out of that 1420 has been sold out. You have this 1000 units with you. So here this 1000 units being a closing stock, the question comes, how do you gonna get the amount of this? See friends, as I told, the closing stock will start from the downward. So here the amounts of this 1000 units, as you can see, will start from the purchase of the June only. So out of this 1000, 440 is of June, the 430 is of total May, it becomes 870. Now whatever 130, sorry, it is maybe 130 even. Friends, this 130 will be from the April month and having the unit price 2.75 also. So if you take a look from the downward, the thousands were the youngers. The youngers means starting from the June, then May, I left with 130 till now, 1000 minus 440 minus 430, that 130 was out of April. You just multiply it with the unit prices to get the total value of the closing stock. So friends, as you can see over here, the 440 having the unit price, the per unit prices were there, the latest purchase from the downward you took, and the latest, the younger one, was from the June to May to April. Hope so you are understanding how do we got this 1000 units prices. 3077 is the value of your closing stock as per the Fifo method. Take a look towards the gross profit. Friends, the total sales, how do we got that? So we got that 1420, 7000 already provided with. The total of the purchases, see the last column. The total rupees, total dollars, total amount of purchases, this amount of dollar total purchase. The last column you can see 7600 plus 1000 plus 875 plus 1155 plus 1290 plus 1430. Here you got this answer, getting the total purchase 6510. Friends, you are asked with the GP. You all know till now what is GP. The formula is the sales minus cost of sales. What do you mean by cost of sales? Opening stock plus purchase minus the closing inventory stock, the value of it. But basically opening stock is not here because it's the first year of business, so there is no opening stock. So the purchase minus closing inventory, you're gonna get this 3433 is the cost of the goods which you have sold, the cost of sales. It is also known as cost of goods sold. You deduct the sales minus COGS, the cost of goods sold, and you got the final answer, the gross profit. As here 3567, you can see. Hope so you would have understood how this things are affecting, or different methods which are affecting the value of inventory, and as the inventory value changes, the gross profit will also going to be changed. This is a cyclic rule about connecting the gross profit, the closing stock, towards the financial statements also. Friends, let's take a route towards how these Ind AS2, or I say International Accounting Standards, are providing you for the different requirements. Friends, as already discussed, the accounting standards IAS are always providing you some protocols. How do we gonna deal with some of the valuation concept? How do we put it or present it into a statement of financial position or income statement and all? How do we going to use the methods we will select and all that? These are the protocols, the norms and the rules provided under IAS 2. Some of those very important requirements I have put up over here, which states that here what is value. You need some value. Always when you put up something into accounts, you always should have some money value of that. So the value here in the IAS 2 as determined states that cost or NRV, whichever is lower. We have already discussed this. Friends, another requirement that is coming, like say cost, when I say the cost is starting to incur from its raw material to its finished goods base. Friends, the cost here will include the cost of purchase and the cost of conversion. Friends, the purchase cost and the conversion cost of the goods which are ready to sell, which are not sold right now, just ready to sell, the includes first of all its purchase cost. The conversion cost means the labors, the overhead cost which are there, which is making that material into a finished goods. The machine is processing on it, with that the labor of some of the goods is processing on it. So accordingly you get this total cost, and which includes overhead also. But friends, most importantly, some of the costs will not include. That means the cost which are there, which is not part of production, but which are just part of your admin and selling expenses. It is not the cost which is you are preparing and you are incurring to make the product. Only the cost which to make the product will be part of your total cost. Another one, Fifo and Lifo method, as you can see. See, some of the costs which are excluded as provided, like selling cost, sales, the storage cost, etc. Administrative cost, some of the abnormal profit and losses of the materials will not be a part of your total cost. Fifo weighted average, the Avcu method is allowed for the cost valuation under this IAS 2. Friends, these are the basic requirement. You have some special even course content which includes this IAS 2 different requirements. The disclosures you need to disclose into the notes to the financial statements about what method you used and etc. Friends, now take a look towards a very simple question. It's providing that in the second paragraph, which one of the following list consists of the item which may be included in the financial statement of position, the value of inventory as per the IAS 2? It will be included. Friends, you should consider that what will be included. So here, take a look for all the stuff. One of the most important thing, carriage outward must not be included because it is a selling related expense. It is not part of your total cost. So here is your correct answer as C, just because see in the portion C, the depreciation plant, the machine which is utilized into the manufacturing, in the production, here that machine will going to be depreciated. The expense of depreciation is added as a cost for the cost of production. Friends, we have a separate subject, that is F2 I am talking about. There is a separate material chapter, the cost also, the cost of production it includes. You will learn the better in-depth analysis and knowledge for that in that subject. Here the carriage inward was there. When you purchased the goods, the carriage inward, the goods were coming inward and you paid some freight charges of the transportation vehicle, that is your carriage inward. It's a part of your purchase cost, must be included into the raw material, the inventory cost. The material itself and the foreman wages. The foreman wages, basically this wages also will basically be part of your cost of production, because that foreman was working into the factory and was also part of the production team, and that's so here you got the answer total. The answer is C, where all the items are included in inventory. Friends, hope so you would have understood this very important chapter in terms of paper F3, and it also is connected with the entire subject called costing F2 paper. Thank you.
If you like this video, share it with your friends. Subscribe to our YouTube channel to watch more such videos and learn from our expert faculty members. Press the bell icon to get regular notifications whenever we upload a new video. Download NDI mobile app to get complete CA course online. We value your support. Thank you for watching.